From the News Channel 5 Network, this is Morning Line with Nick Beres.
Good morning, everyone. Thanks for joining us on Morning Line. Nick Beres here with you on a Tuesday. Hope you're having a good morning. And listen, always am going to put this out there. You're invited to join in the conversation. You may have a comment or two. I'd be curious to hear this morning whether you have a thought on what we're discussing, or if you know of someone or yourself have ever sought out one of these loans. And what we're going to talk about today are payday loans, if you will, flexible credit. You see the advertisements on TV. They advertise in all forms of media, including here on News Channel 5. You know, I got my title back from Title Max, and there's some other ones where they're, you know, getting money when they need it in the short term, and then, you know, they can use it to spend on what they need. And how this plays out, of course, the advertisements are one thing. How these things really work is what we want to kind of get into this morning, and what the issues are, and keeping in mind that some of these high interest rates and the money being made through all this is all legal under state law. But I think it's something that anyone who wants to consider these types of loans has to have an understanding of how they work, or you might find yourself in debt up to your neck. The number 737-7587. With us this morning is Marla Williams from Legal Aid. It's good to have you on, Marla.
Thank you.
I mean, can you in your mind, if you had a friend who was facing some financial hardship in the short term, can you foresee any scenario in your mind with a friend that you would recommend they go to one of these lenders?
No, sir.
Under any circumstance?
No.
None?
Not if it was my friend, no.
And why is that?
Well, because they would typically pay back a whole lot more than they borrow. Mm-hmm. I just think generally it's not a good idea. Okay. There should be other alternatives. Certainly if it's my friend, I would help them out. But,
well, of course. But
alternatives, they need to find alternatives to seeking money from payday lenders.
The fact is, though, thousands and thousands and thousands of people do seek money here in the state of Tennessee, and these are all around the country, of course, these payday lenders, on a daily basis seeking this money out. Folks who need it short term. Let's lay this out then. What is the definition of a payday lender? I guess that kind of says as much right there. I'm assuming you're taking a loan based on your pay that's going to come down the road and you'll pay it back. But how do these work?
Well, how they work is that you borrow money and you pay back over time, or for instance, there's first the title loans.
Okay.
That's not really a payday loan, but I want to talk a little bit about that. That is a loan where you get money as the borrower or the customer in exchange for giving the title or leaving the title to your vehicle with the lender.
That's your collateral?
Yes.
Okay, and by the way, let's make this clear that folks who usually tend to go to these businesses to take money are folks that cannot get loans from banks.
That is
meaning
true.
That these are folks who probably have bad credit and have no place else to perhaps turn and desperately need some money.
That's correct. Typically, I will ask my clients why did you resort to this type of loan, and the response is, I filed bankruptcy, so I can't get a loan from a bank, or can't get a credit card. So yes, these are people who are desperate for money, who can't get that at a reasonable interest rate.
But they aren't destitute in the sense that they must have some assets, because these payday loan companies or the title companies, title there, meaning if you have a car that is paid for, you put up your title, they give you the money, you are supposed to pay back that money, I assume, with interest. If you don't or can't, they have your title and they'll come take your car.
That's right.
That's how it is. And okay, again, this is all legal, it's legit. Some people say it sounds like loan sharking, but it's not. I mean, it's all written, it's legal under the law. And now if these folks put up their title, I'll let you finish explaining on the title loans, they take the loan out, they typically have a window to pay back the amount plus what? How much interest do they typically pay, and then they can get their title back?
I'm not quite sure on the title loan how much the interest and fees are. But that is, they're given a certain amount of money in exchange for the title, as I said before. And as you alluded to, if they're not able to pay back, they are at risk of having their vehicle repossessed. And let me just say that sometimes these lenders allow folks to roll over. Say, for instance, you gave your title, you have a month to pay back the loan in full. You don't pay it back within that time, so you may roll over and do another extension of credit. They keep the title as collateral, but then you pay additional fees.
So it just keeps growing.
It keeps
as
growing.
You put it off.
Right.
You're still driving your car, but you don't have the title. They've got it.
Right.
And it rolls. And then, oftentimes you hear this with folks with credit cards. Eventually, if you're not careful, you get buried and you can barely afford the minimum payment on that debt. You never get out from under it. Is that what happens with some of these folks? They stop paying, they take you to court?
Right. Like with the title loan situation, if they repossess your vehicle as collateral, often they do not get enough at the sale of your vehicle to pay off the loan, so you still owe the money. So they can sue you for that amount.
So a lot of these folks maybe are the working poor. They have jobs, so they can go and garnish your wages.
Right. Garnish your wages.
Do you get the sense with some of the clients that you've talked to with legal aid, they went into this, as you said, I had no place else to turn, I went. How quickly do they realize what they've done is burying them further? Did they acknowledge that was a possibility? Or did they honestly go in thinking, I'll get this money and I'll pay it back and I'll be free and clear? How quickly do they realize that, what I've done here is not really helping me, maybe briefly in the short term, but it's buried me long term?
It depends on the person. Sometimes we see clients who realize it real early on, but sometimes we have clients who have been involved in these types of loans for years.
Wow.
And have just tried to pay and never are able to pay it in full.
Let's talk then too, as we lay out kind of what's available out there. Payday loans, how's that different from a title loan?
Payday loans are different in that, first of all, you do not have to give collateral. You don't give a vehicle or anything, but you get a short-term cash advance, and that's based on you bring in proof of when you get paid, so that they will have the loan becoming due on the date that you are paid. And what happens is often you leave a check, like you leave a post-dated check.
Blank.
Well,
would it be blank or would you
filled out to the lender?
Okay, filled it, but is that total amount that they owe written there?
Yes,
Okay, so
the
it's
total
all
amount
set.
that they owe, and but of course the amount they owe is
more than
what they got.
Well, in fairness, to the lender or whatever, if you're borrowing from anyone, regular banks or this, you're going to have to pay them something. That's how they make money. But
right.
What kind of interest is it typically? Like if I'm borrowing $1,000 from one of these payday loan places, I've got a month to pay it back. What do I have to pay back? $1,000 and...
Probably in the neighborhood of 20-30%.
20 or 30%.
24-30%.
Okay, and then if you miss that month when you're supposed to pay that back, then it really starts compounding.
It does.
Are there fees as opposed to the interest?
Well, in this situation, there's interest, but what happens with the payday loans is, as I said, the lender has a check. And so not only do you have the fees and the interest that you have to pay the lender, but what they do is they take the checks to the bank on the date that they are to be, drawn, or on the date they're post-dated. And if that money's not in the bank, you have the additional problem of overdraft charges. And let me also say this, is I had a client once who he received Social Security, and on the date, the morning that his Social Security was deposited into his account. He got there 8:30. His money had already been taken because, according to the banks, these payday lenders line up at the window before the bank opens, and they make sure that they, send the checks through.
Yep.
And so my client came in, shortly before 9 and said, I went to the bank and I don't have any money, but he owed the payday lenders.
Yeah. Wow. And again, it's all legal. I noticed that there was a mushrooming of these businesses after 2015. And we're going to talk more about where you predominantly see these businesses. In other words, you're not going to see many of them in Belmead, if you know what I mean. But what happened in 2015?
In 2015, the Flexible Credit Act was passed. And that has to do with flex loans, as we call them for short, and that's what they're called, is flex loans. But the Flexible Credit Act made it legal to charge interest, which is different. Interest is under the Flexible Credit Act is for a flex loan is 24%. The problem for a flex loan is that the law allows for what they call customary fees at 0.7%.
On top of it.
Oh, yes.
Yes.
Yeah, so for the APR, with the 0.7% is 279.5%. So that's a situation, like as you said, it's legal. But the Flexible Credit Act made that legal in 2015.
And that was passed by state lawmakers. If you wonder about the proliferation of these as we go to the break, be clear on this. It is a very, very lucrative business for those who run this. And I would imagine they have a powerful lobby.
I would say so.
We'll take a break. We're going to get more into this. We'll take some phone calls. Have you ever taken a loan, a payday loan, a flex loan, a title loan? Be curious to hear how that worked out for you. Again, it's all legal. It's the American way you go about this. People make these choices. But we're going to look into, who it is that maybe benefits from this and who doesn't. Take some of your calls and get more into the details with our guest with us this morning from Legal Aid, Marla Williams. Stay with us. Back with more.
I'm Samantha, this is Jay. We're fixing the place up. Please be quiet.
Excuse me?
I was talking to the ghosts.
Right, because ghosts are a real thing and my wife talks to them now.
So hot.
This is our house.
We've been here longer than you.
Yeah, and guess what? We're alive.
Alive?
Ouch.
That is how we do it.
Up top. No, just put your hand up. Close enough. Someone ate all the Oreos I bought.
I think the contractor ate them.
Liar! He is a liar! I watched him eat the whole thing.
They're telling on me, aren't they? This isn't fair. You got a whole team of spies watching my every move.
I mean, they don't tell me everything.
One of the cookies fell to the floor, after which he ate it.
You ate a floor Oreo?
Not cool, guys. Not cool.
I would have called it a Florio. That's just my improv training kicking in.
TV's #1 new comedy, Ghosts. Catch up anytime and streaming on Paramount+.
If you spend time in the great outdoors, hunting or fishing, you need to watch Southern Woods and Waters on News Channel 5+. Join host Brandon Dowdy and our area's top sportsmen as they share their experience and knowledge. Southern Woods and Waters is all about Middle Tennessee, and it's live. Call in with your questions. Whatever the season, that's what they're talking about. Tune in to Southern Woods and Waters Thursday night at 8 on News Channel 5+.
It's a time when so many things can change and when so many candidates want your vote. This election season, if you want to hear complete thoughts, not sound bites, Inside Politics on News Channel 5+ has what you're looking for.
We've asked both candidates to join us on Inside Politics.
Host Pat Nolan has the experience and knowledge to get to the truth. Watch Inside Politics with Pat Nolan, Friday night at 7 on News Channel 5+. This is the Hill where power congregates, and special interests are drawn like magnets. You may think you don't have a chance against their influence, but you do. Because when you can see what happens, you have the power. News Channel 5 investigates. The messy reality revealed. Ongoing, deep, investigative journalism. Only from News Channel 5. What's your weather story?
You could see it coming.
Big storm.
So I actually heard it.
How it made you feel.
It was just so scary for everybody.
How it changed your plans.
It was right down the road from us.
Maybe even changed your life.
Go up Riverside Drive.
Severe weather hits home.
Lord bless us, I tell you.
So when storms roll in, we want you to be ready.
Do you have an app that you use?
Feel safe.
Storm Shield?
Yeah.
Yeah, no, I love y'all.
Let the Storm 5 weather team protect you and your family. No matter where you are, you're always on our radar.
We are back on Morning Line this morning. Nick Beres along with Marla Williams. She's with Legal Aid. We're talking this morning about something that we all see here in Tennessee on TV ads and the like, payday loans, flexible credit, that type of thing. You know, it's a means for folks who can't get credit at normal banks to go and get money short term if they need it. And on its surface, of course, it's all legal. Really, what is wrong with it? I mean, Legal Aid's involved. What do you do for your clients in this case? These are folks who take out these loans of their own free will. The question can be asked, did they really understand what they were getting themselves into? But, you know, it's just part of the way money's loaned legally.
Yes, it is. And often, if there is nothing we can do with regard to the amount that the lender says is owed, we can help if the customer who is our client has been sued. We can tell them how to protect their wages from being garnished, and I don't know if you know that if there is a judgment, so if the borrower is sued and there's a judgment against them, the judgment creditor, who is the entity with the judgment, can take personal property. So in a situation where a client of ours has a vehicle that they own, we will teach them or advise them or help them file the proper forms to protect property, and they can protect under the law up to $10,000 worth of their own personal property.
What other kind of property do they sometimes try to take? Cars an obvious one, motorcycles. What else would they take? If you had a nice rocking chair on the front porch, I'm just curious, what can they do?
Usually it's just cars.
Vehicles, okay.
And money in the bank. If you have money in the bank, you know, we looked at a lot during the, well, COVID is still going on, but when the stimulus money was coming in, we did some community education to let people know to, you know, if they have a judgment against them, make sure that you've got the form that you can file, the exemption form that would be used to protect any personal property, including your vehicle, can also protect money that you have in the bank if you fill in the proper information. So if you want to say, you know, I've got my vehicle, but I want to protect up to a certain amount in my bank account at this bank, you file that with the court. And so if the judgment creditor attempts to execute upon money you have in the bank, that form, the exemption form, protects that money from being taken to pay the judgment.
These legal battles are civil. I know you oftentimes hear the lenders threatening the borrowers if they haven't paid the debt that we're going to take out a warrant.
Right.
And they claim we're going to seek criminal charges against you. That's baloney.
It is, and it's a serious threat, but it's not. You know, they may say
civil. It's not criminal.
It's a civil warrant, but I think they want people to believe that it is a criminal action that they can.
Oh,
file.
Sure, that would get my attention if I'm not paying, and I think, well, they're going to sue me civilly. Maybe they'll take my car, but they have to catch me. But all of a sudden, I'm going to be in handcuffs and go behind bars. That's a threat that, definitely I guess I would take more seriously, but that's not, you don't go to jail for failing to pay a debt in these instances.
You do not. There's no debtors' prisons in Tennessee.
Right, so you have to, that's an important thing to know. Okay, I mean,
well, often people call us or come in and they're concerned that they
because
can
they've
go to
received
jail
that threat, or
because they've been told that they could get a warrant, and certainly they do not say we can get a civil warrant. But anytime you use the word warrant, that's gonna scare people.
Oh yeah, if you don't say civil warrant, you're assuming it's criminal. Okay. Mm-hmm. The average individual is going to assume that.
Right.
And so that sometimes can be enough maybe to try to scare people into finding a way to get money to pay them back.
Right.
I mean, the truth is, I would imagine most of these people would, if they could, like to pay back the money they owe. I hope most people would want to do that. It's just, it's grown to such an amount that they were, let's be clear on this, the folks who are taking out these loans are folks who, for the most part, are poor, correct?
Right.
I'm never going to go to one of these places and get a loan under any circumstance. You wouldn't.
Yeah.
But part of it is I have some means. Hey, if I didn't have money, I wouldn't go there either.
Right.
But
poor is also the working poor. I mean, these people have jobs. Some of them, and some of them are receiving disability benefits, but. I mean, it's not like you're, as you said before, in the car, you're not destitute, but you're still poor. You work, but you still don't make enough to really meet your necessities.
When you talk about, we're going to get some calls here in a moment, when you talk about the idea of someone needing this money. Now, it's one thing if you really need the money because you desperately need to pay the light bill or put food on the table for your children. I get the sense sometimes people just say, well, I'm going to go get one of these loans because I need a nice new dress for this week. I don't know, whatever the reasons may be. But you say, look, I wouldn't recommend that you do this. There have got to be other ways. If someone's in a squeeze, they have no credit, okay, and maybe they don't have a wealthy friend they can turn to, what are their other options?
Well, I mean, a credit card is even better than this type of loan.
If you can, and these days credit cards give credit cards to just about anyone.
Right.
And so even if you're going to fall into debt in a credit card, that you would say is better.
Oh, it's definitely better. If you have to, I mean, just compare like I said, the APR for a flex loan is 279.5%. You can get a credit card, and certainly your credit score would, influence the interest rate you get with a credit card, but it's not ever going to be that high.
That's a really good point. Not that she's sitting here advocating credit cards are going into debt one way or the other, but if you just have to have it, the obvious solution would be try to put it off, try to save a little money, try to put off whatever you're thinking of buying until you can pay for it a bit more. Let's take a few phone calls. We'll go to Stacy. Stacy, good morning. Hi, Stacy.
Good morning, Nick.
Morning.
I've got a situation where I'd like to warn people against these. They're not payday loans, but they're structured settlements. There's a company, I'll stay away from names if you want me to do that, but I think it's pretty familiar. They do a lot of advertising, and their phone numbers and the jingle and everything like that. It's very catchy. What attracted me to them was I started paying attention to their ads, and they were offering gift cards in exchange for just getting a quote. And I thought, well, I'm serious about this to some extent. I have an annuity, and I've passed all the surrender periods and everything, and I'm getting the payouts. But if they've got a better offer, then at least I'll look into it. And the other thing was that I have a situation where it involves a family business, and I'm getting checks from that. I'm sort of a silent partner. It's a business started by my grandparents, my grandfather's generation. But in any event, it's not liquid, and there are stipulations in the agreement, the partnership agreement, that what I would have to do upon my death, which I don't want to do. And it's just different things like that. So they sort of looked into the second one, and they said, well, we really don't deal with that, but let's see what we can do with this annuity. And then they were bringing up the amount of the gift card, and I said, wait a minute, that's not what was promised on the commercial. And then and the fact that after that, the commercials, they lowered the amount, because I think, like you said, it was kind of tied to the pandemic and maybe what they thought they would have to give out versus whatever. But anyway, so they wanted some information about this annuity, And so, like, and I will say this on their behalf. They said something about, we want this, and they told me what it was, but it's so complicated, I never even heard of it. So it was like I'd have to talk to the insurance company to get them what they wanted. But they said when you send this, you can block out your Social Security number, which, if I had thought about it, I probably would have asked them about doing that, but I hadn't. So it was to their credit that they even indicated that.
All right, hang tight on that because we've got a lot of calls coming in. Stacey, are you familiar kind of what she was referring to there?
I have heard of structured settlements, but I don't have any, experience with that.
And that's why, Stacey, it may have been a little bit off. I see where Stacey was going with that. Mm-hmm. In one part that she hit with me is just the complexity of it and the understanding of it. And, when these folks go into it, and she just described it there, and is it similar with other things about really, if you can ask these questions, and I wonder how many of these folks actually do ask many questions going in. It can be pretty complicated, can't it?
It can, and what she said about, her receiving the gift card and then that wasn't what was agreed to. That's often what we hear in other types of cases. But again, like I said, I don't have any experience with structured settlements, but it's kind of like the same though, with, the contract.
Yep.
Fine print, and I don't know if there was fine print in Stacey's case to say what was going to happen or what would happen with the gift card, but lots of issues where in a lot of these, with these types of loans, folks just really don't understand what they're getting into.
Yeah, you just don't. We have to go to a break, but you don't want to sign something unless you read it or look into it. But you understand in these circumstances when they go in, and I'm guessing again, some of them are poor, they're desperate for some money. You wonder how educated they are to begin with, one way or the other, and do they really take the time to ask the questions? And I don't blame them if they don't. They need the money, and they make it super easy when you go in.
Oh yeah.
Paying it back's the hard part, and so yeah, it's set up really. This business, you see why it's working for those who run these businesses. We'll take a break. When we come back, Lynn, Stu Ellen, and others, if you're on hold, we'd like to hear from you as we're talking about these types of payday loans, flexible credit, things like that, right after this. Stay with us.
This is a Storm 5 weather update. For weather on the go, download the Storm Shield app.
I'm News Channel 5 weekday morning meteorologist Nikki D. Ray. Here's a live look at the currents across Music City, USA. You'll notice on the Power 5 radars, clean sweeps are out there. Some clouds just settle down to our south. As we go throughout the day, we'll see mostly sunny skies. And in fact, here's a look at the temperatures right now across Middle Tennessee as well as southern Kentucky. How does it feel? Well, pretty close to face value thanks to those winds staying nice and light out of our north. Here's a look at your 7-day forecast. Highs today will top out 89 degrees. Tomorrow, we're going to do it all over again. Can't rule out one or two small little cells closer to the Alabama-Tennessee state line for you on Wednesday afternoon. Thursday, some pop-up showers are likely as winds will shift back out of our south. Temperatures will warm around 90 degrees, feeling as if we're on the low to mid-90s. We'll do that again, making our way over into Friday as well as Saturday. Better rain chances next week.
No one feels the full impact of weather more than a farmer.
The weather's constantly changing and things constantly evolve around us.
The weather impacts their livelihood and our food.
As the plants are beginning to grow and all that new tender growth, the weather plays a huge factor in how those mature and how those plants continue to grow out.
So when storms roll in, or it rains, or it doesn't, it matters a lot.
You can do everything in your power. You can get the seeds in the ground at the optimal time, but when you miss those window of opportunities for rainfall, those are factors that you have to really become at peace with.
Whatever your reason to follow the weather closely, we want you to be ready, to feel safe. Let the Storm 5 weather team protect you and your family. You're always on our radar.
We are back with Marla Williams. She is with Legal Aid. Interesting topic, one that I think a lot of people may be aware of, maybe have taken advantage of once in a while, tried it, realized, it worked for me, or maybe it didn't. Payday loans, flexible credit, and the like, and she works with clients dealing with falling into some of the massive debt that can come out of all this. I understand people desperate for money, but as she said, I mean, if you're that desperate and you have no other option, a credit card, is a better option because the interest rates aren't quite as big. You just don't want to go into debt if you could. Some people have no choice, though. They just have no choice. We got a few callers here that waited through the break. Lynn, good morning. Hi, Lynn.
Good morning.
Morning.
I just have a few thoughts on this. I have never had to use this, thank God, but I blame the useless state legislature for not increasing the minimum wage for the working poor, for not expanding Medicaid. So these people who are living paycheck to paycheck, you have a medical emergency, or your children need shoes, or you have to pay the electric bill, or they're going to turn your electricity off. What are they supposed to do? And can this useless state legislature not put a cap on the interest rate that these people have to pay? I understand these are legal companies, but their ads are so misleading. I got my title back with Title Max, and they show these people dancing with joy, showing their car title. What they don't say is, on a $200 loan for your car title, what are they paying back? Probably well over $1,000 on a $200 loan. I think it's unconscionable that these people sit in the state legislature and twiddle their thumbs and do nothing for the working poor of this state. Those are my only comments on that, but thank you for listening.
Sure, Lynn, thank you. You really hit on 2 points there. The first one we'll get to in a moment. The second one with regard to interest rates in the state, we've already established that, in 2015 and others, the state lawmakers, I think in part because, look, they're being heavily lobbied by a very financially rich group here that runs these things. And who are we kidding? That makes the difference. They don't really regulate the interest rates, or they can, but they don't limit them, do they? They don't put a cap.
Well, there's a cap.
Okay, I mean,
but
a reasonable cap.
The cap is very high. Thank you.
Okay,
yeah.
Okay, you're right. So they can argue, well, sure, there's a cap on this, okay? We're capped, but the cap is absurdly high.
Right.
All right, and the other point that she makes is a larger picture. I mean, I think it's pretty clear that these types of businesses are going nowhere. They're going to be here, and people will continue to use them. The best way to get people not to use them is to find a way for them to make a living and not need to take out these loans, right? Isn't that the big picture?
I agree with that, but I think the education, too, like, I hope people are watching today to hear about this, and also our firm tries to communicate to folks through community education, just to let them know what they're getting into, so then they'll make an informed choice whether they want to borrow money from one of these entities. Because often we hear that, like everybody says, I didn't know what I was getting into.
Yeah, I'm just guessing that most of these individuals going for these loans are not thinking first, I'm going to call legal aid and run this by them. I mean, that's just not, that's probably never happened, okay? No. So you're usually seeing them after the fact, right?
Right.
After the fact. But maybe people are watching who know of friends or loved ones or are thinking themselves, and this will give them pause. Now, either way, you're going to pay quite a bit on this. Now, understand, if you have lousy credit, okay, for whatever you did earlier in your life, when you take out a loan somewhere, you're going to be asked to pay back more interest because there's higher risk to the borrower or the lender. That's reasonable, right? So the issue here with these establishments is if you take out the loan, you're going to be paying more. If you can pay it back within that window, you're paying more, and it's exorbitant. But hey, you've got bad credit, so you're going to have to pay more. Sorry, that's the way it works. The real trouble comes when you miss making that first payment.
Yes. Well, the real trouble, yes, comes when you miss
because it really
payments.
Builds up, right?
Right, and you roll over, and. But with the flex loans, I mean, the 0.7% customary fee. Yeah. That's what I want to emphasize. With flex loans, the law allows a 24% interest, and the statute makes a distinction that not to confuse interest with the fees. So the fees are 0.7%. And that's where the problem comes there. I mean,
it's crazy that they differentiate that because they split it. I mean, it's basic. You're paying whatever it is that you're paying back because you're, the fee that they get or interest. It's all the same.
All goes into the annual percentage rate computation. But But with the flex loans...
And by the way, why is it called flex?
Good question, Nick.
Is it,
it's called flex because it's an open line of credit. So that's one of the attractions is, Nick, I'll extend you credit of $4,000, and you don't have to take it all, but we will be here for you should you need more. So you could take, $100, $200, but you've got an open line of credit up to, some people qualify for up to $4,000.
It's very tempting, isn't it?
Yes.
See, that's what it is. You maybe go to them and you're like, I just need $200 for this weekend. And they say, well, we'll open up a line of credit for you for up to $4,000. You'll have that in your pocket if you need it. And then, but really, all they needed really was $200, but maybe they're like, wow, well, sure, you're gonna loan me that? I'll do it. Before you know it, they've spent that.
Right.
That's very clever. You know exactly what's going on there.
And well, let me just say also, in some of the cases that we've handled in state courts, we do, discovery, like ask the company for records, and we see that their activity that they record is that they're calling up these people who have
flex loans,
who have an more money that they can borrow, and just say, hey, Nick, you've got, you only got $200 that you borrowed, and you got $400. You want to come in and get some more money?
Yeah.
So
I remember. Look, and you wonder who falls for this kind of crap. But it's like, I remember with credit card companies, there would be times sometimes I'd get with my statement attached to it checks for Nick, you can sign this check and put it in your bank right now for $5,000. And I'm looking at this check. And I'm like, wow. And then you realize, wait, it's credit. It's just like, no, you tear it up or whatever. I mean, it's tempting, and that's right there. They're trying to goad you into borrowing more.
Right.
More than beyond what brought you there in the first place. Again, folks, you see exactly what's going on here. And yet, it's legal, and yet it does work. Because thousands of people do this every day, because the people running these businesses are almost wealthy beyond belief. Let's go next to Sue Ellen. Hello, Sue Ellen.
Hey, y'all. I've got a couple of comments, and I have had experience with this, and it was a title loan nearly 20 years ago. But first, I want to comment. In the late 70s, I took out a 90-day loan through the bank for $300. I had to have a co-signer. I had credit at the time, but this was a way to help build up my credit too, and I didn't need the money. And it was at market rate, and I paid it off. And they weren't going to give me any more money during that time, any loans, until I paid off this loan. And there was no guarantee that I could get another 90-day loan behind that without a co-signer, because it was just too dang early to know what my credit score might be. And this did add to my credit score. But the other thing is, when people say comparing these people to loan sharks is not really quite right, I beg to differ, because I remember loan sharks. And if you didn't pay a loan shark their money back, they didn't get their money back when they wanted it. They made sure that you didn't make money. So they broke your hands, broke your feet, broke your legs, and made it where you could not work and you would pay. You would end up on the streets broke and homeless. So what's the difference? The lady just sit there and talked about payday loans and how they could swipe their whole Social Security payment off and stuff like that. So my experience 20 years ago, roughly 20 years ago, was on a title loan through kids who had 3 kids before they were 20 years old. And people were trying to help them initially before that first child was born, and somebody had gave them a van. And this was a luxury van that somebody that had means just gave it to them. When they went to the title loan people, the blue book alone on this van was $15,000. They got a $300 loan. A year later, they were still not able to pay that $300. And when I approached them, the deal that I set up was, I'm going to go down there and pay off whatever monthly fees it is going to be this month. The interest rate was right around 298%, so they were paying like $100 and something a month on the fees and interest every month. And I sat there and put a lien on their vehicle, took the keys and the title, and it took them another year to pay me the $300 back. But in the meanwhile, they had paid around $1,500 on a $300 loan.
Okay, her point's made. And well, the difference between this and loan sharking, the traditional thing that you think about, one, they're not going to come break your thumbs. It's regulated, there's none of that. But I see her point that they can do what they can do under the law to garnish your wages, make sure that you can't take your paycheck home with you because you owe them and they get in line first and get the money, right?
Right.
I mean, what she described, young kids with children, desperate in this, and that's how on a $300 loan they can end up losing a very expensive van.
Right. Right.
That's how it goes.
Right.
Let's see what Rick. Let's see what. You want to take a break real quick? Okay, we'll take a break. When we come back, we've got Rick and others. Popular person. We'll take more calls right after this.
If you spend time in the great outdoors, hunting or fishing, you need to watch Southern Woods and Waters on News Channel 5 Plus. Join host Brandon Dowdy and our area's top sportsmen as they share their experience and knowledge. Southern Woods and Waters is all about Middle Tennessee, and it's live. Call in with your questions. Whatever the season, that's what they're talking about. Tune in to Southern Woods and Waters Thursday night at 8 on News Channel 5 Plus.
No one feels the impact of weathering more than a farmer.
So this is a 200-year farm.
Yes, ma'am. There's a lot of sentimental value.
A lot of responsibility.
Yeah.
You know, do you feel some of that weight?
Oh, yeah. Oh, yeah.
The weather impacts their livelihood, our food.
You're in a whole lot of like watch and wait.
It'll keep you up at night, just watching the radar.
Yeah.
Watching you.
So when storms roll in, or it rains, or it doesn't, it matters a lot.
That's the hard part about weather is that you need the right amount of sun and the right amount of rain and the right amount of clouds. If you get an excessive amount of any of the above, it just messes with the balance.
Whatever your reason to follow the weather, we want you to be ready, to feel safe.
It's something all the time, but at the end of the day, when I can sit down on that swing right there and watch the sun go down and see what I've got, that's what farming's all about.
Let the Storm 5 weather team protect you and your family. You are always on our radar.
What is Sky 5 Sky Map?
I-40, not the way to go
It does
right now.
more than name streets. Sky Map is Sky 5's heads-up display,
One lane.
telling you how long the traffic jam is,
Almost 4 miles of backup, as you can see from Sky 5
helping
measuring
Rebecca
using Sky Map.
give you the best ways around the mess.
You can get on I-40 and head ahead of the problem if you use maybe Division Street or Lebanon Pike. Get over to Central Pike and onto I-40 West.
Stay on time with Sky 5 Sky Map, only on News Channel 5 this morning.
We are back. Final segment this morning with Marla Williams. She's with Legal Aid. Helps an awful lot of people sometimes dealing with debt that they're trying to wrestle with, these payday loans and the like. We have Rick who waited through the break. Let's take his call real quick. Rick, go ahead, Rick. Are you there? Hey, Rick, good morning. Go ahead.
Good morning. Well, I just wanted to say that I was recalling back, I think it was 1977, I bought my first car.
Mm-hmm.
And I found out, I didn't know at the time, I knew nothing about interest rates, that there was a cap at the time on interest rates. It was 10% plus something called 4 points, which is, I'm not quite sure what that is.
Yep.
But the most they could charge you was 14%. Well, they charged me 18% for the car.
Yeah.
And I didn't know anything about that. I didn't know that they were overcharging me.
Sure.
But a friend of mine looked at it. I showed it to a lawyer, and I was able to get not only my money back for the car or for the loan, but 3 times that amount. Triple. I got triple. I got like.
Because you caught them, yeah, you caught them doing something wrong and sometimes charging fees. Have you come across cases like what he described there? And that was years ago, but do some of these companies sometimes wedge in fees that maybe aren't entirely appropriate? That, you know, I mean, look, I get bills sometimes from cable companies and others, and I don't know if what that 12 cents a month or $2 there goes toward. I don't know.
They do.
Okay.
And Rick, I think you're trying to say treble damages.
Treble damages, which is
the 3 times the amount of your damages. But yeah, often in the cases that we see, we find that these companies have assessed fees that they shouldn't have, even under the law. The law states what fees and what can be charged upon default. And default means when you don't pay, when the payment's due, or you don't pay the amount that's due. You know, so we found that sometimes these entities continue to charge customary fees, which again is the 0.7% per day, and when they shouldn't, because the law says that the law does not say that those fees are allowed after default.
Is that a gray area, or is it pretty clear that that's inappropriate?
Well, it hasn't. There's not been a court decision on it, but the statute. The statute doesn't.
It's pretty clear.
You know, the statute's clear on what can be charged after default. But so what happens is, even if you miss a payment, these companies still, you know, continue for months to assess fees, and then after they, you know, they stop collecting, and then they stop collecting through the company, and then they refer it to an attorney.
And by the way, what if you just declare bankruptcy? I mean, like anything else, that kind of shuts it down for some people. Of course, you don't want to do that if you can avoid it. Real quick, a couple things. One, we've had representatives from this industry on this show before. It's been a while, but I mean, they're basically going to say what I've heard, and I think you've heard from their attorneys sometimes when you're in litigation with them, is, listen, we provide a service, okay, that people take advantage of their own free will, and we allow them to borrow money when they can't get it anywhere else for money they really need. And that's kind of what they hang their hat on, and that sounds good, and that's true. Now, they're not saying, well, to borrow this money, you're going to have to pay an awful lot, but on its face, that's basically what they do, is it not?
It is.
Okay, so that is a service, their own free will. You're not working with a bank or anything. You have no dog in this fight, except you're with legal aid and you see what happens. The big picture for you is that that's true, they provide it, it's legal, and what I just described sounds pretty good for some folks. Your issue is that, you know, sometimes people don't realize ultimately what they're getting into when they go that route.
Well, yes, that's